Welcome back to Chairman's Briefing and happy long weekend to the Canadians watching. We're in partnership this week with Dryden Gold. I'm Rachel Lee. Let's get into it. Now, the monetary metals, both gold and silver, are in the midst of a correction. So far, gold's downside trajectory has been somewhat muted, while silver has seen greater volatility. Some in the analyst community are calling for further weakness in the metals, with the caveat that the downside should be limited. Market analyst Fawad Razakzada of Sonex Group believes a correction in the gold market is long overdue. He cites several bearish factors. One, no obvious catalysts for a dollar drop. The dollar index recently had one of its strongest weeks in months. Also, this week's inflation data is unlikely to significantly impact rate cut expectations, and gold remains severely overbought across various timeframes. Now, despite these factors, Razakzada notes that gold is likely to find support during price dips, which could counterbalance the bearish influences. This creates a complex market scenario where downward pressure exists alongside underlying support for gold prices. The rip in gold prices is sidelining the average retail buyer. According to Reuters, physical demand for gold across key markets has fallen off sharply in the wake of record high prices, with some retail consumers cashing in and booking profits. Robin Kolbenbach, who is head of a Swiss-based refinery, told Reuters that physical demand in general is, quote, super low everywhere now. There was a spike in demand in August when India cut its import duty in an effort to curb smuggling, but since then it's gone dead. In Europe, Germany remains the largest physical investment market for gold, but demand in the country as well as in Austria has been hit hard since 2020 as high interest rates prompted investors to switch to yield-bearing assets. And according to the World Gold Council's latest figures, central banks have also scaled back purchases, accumulating 8 tons of the precious metal in August. This is the lowest figure since March of this year. And analysts hope that another crucial category of demand, physically backed gold exchange traded funds, will see more activity in coming months. But for now, their inflows are rather modest. The final quote on this topic is from Adrian Ash, who is head of research at Bullion Vault. Quote, the cure for high prices is supposed to be high prices. But gold keeps defying that logic, setting fresh record highs even though visible demand has either collapsed or gone negative across pretty much all segments. Copper is once again demonstrating heightened volatility as the market attempts to reconcile potential short-term surpluses with the longer-term supply challenges. After China unveiled a laundry list of monetary measures to help its troubled economy and property sector, the metal took flight in the hopes of immediate and amplified demand. But the market needed more to sustain the metal's run. It was looking for more stimulus when China's National Development and Reform Commission held a press conference earlier this week. Zhang Shangjie, who is chairman of this reform commission, stopped short of announcing any new major stimulus plans, underwhelming investors and weakening the rally in the mainland Chinese markets. Sean Rain, who is partner and managing director at China Market Research Group, told NBC that, quote, many Western investors will take profits off the table today and wait to see if more money comes in. If there's no fiscal stimulus with real meat and details, the rally will fade. With silver prices ripping 30% plus higher year to date and miners struggling to keep up with demand, M&A in the silver arena is accelerating, leaving fewer options on the table. Last month, it was First Majestic taking out Gato Silver in a deal valued at $970 million. Last week, it was Coeur Mining successfully taking a run at Silvercrest in an all-paper deal valued at $1.7 billion. This is an 18% premium based on 20-day volume-weighted average prices of Coeur and Silvercrest each as of October 3rd. Now, Coeur's prize is Las Chispas, which is Silvercrest's flagship producing asset in Mexico. Las Chispas is billed as one of the world's lowest cost and highest grade mines. In its first full year of production, 2023, the operation cranked out 10.25 million silver equivalent ounces, with average cash costs running $7.73 per ounce. The combined entity, with 5 operating mines in North America, is expected to generate 21 million ounces of silver and 432,000 ounces of gold annually. Next up, another acquisition. It started last week with rumors that Rio Tinto was on the hunt, seeking greater exposure to lithium. Large cap lithium players across the board got a lift from the news, including Arcadium Lithium, which saw its share price spike higher with the speculation. This past Wednesday, the buzz was substantiated when Rio Tinto confirmed the acquisition of Arcadium. The sum of the strategic rationale is that Arcadium's Tier 1 assets have maintained high margins cycle after cycle, and its resource base is expected to support about 130% capacity growth by 2028 within Rio Tinto's existing geographies. When we take a closer look at what's under Arcadium's hood, the company's website reveals a sprawling resource base spanning across the globe, from Argentina's high Andes to Quebec's rolling tundra. Dryden Gold just struck it big at their Aurora project in Ontario. They found a section of rock with 30.72 grams of gold per ton over 5.7 meters. But here's the kicker. Within that, they hit a super rich pocket with 313 grams per ton over half a meter. This discovery could be a game changer for Dryden, potentially making them a major player in Ontario's gold scene. Back in July 2022, while Rio 2 was in the process of pushing its Fenix gold project, Chilean authorities stepped in and rejected the company's environmental impact assessment over concerns related to local water resources and wildlife. Now, the rejection of this assessment crushed the stock and forced the company to scramble in an attempt to quiet concerns. After updating its assessment and a long, drawn-out pause, the company announced in December of 2023 that Chilean authorities had approved its updated environmental impact assessment, clearing a path for the construction and operation of its Fenix project located in the Atacama region of Chile. Only a handful of sectorial permits required final approval. And this week, on October 2nd, the company announced that it's now fully greenlit to construct Fenix. It's anticipated that it'll start next month. The stock has established a solid uptrend and has recovered much of the ground that it lost after its initial assessment was rejected back in the summer of 22. During a radio address, Burkina Faso's junta leader, Ibrahim Traoré, said that, quote, "We know how to mine our gold, and I don't understand why we're going to let multinationals come and mine it." Without signaling who specifically will be impacted, Traoré said that, in fact, mining permits will be withdrawn. West Africa is proving to be an increasingly challenging jurisdiction for a foreign entity to operate. Burkina Faso's neighbor, which is Mali, another junta-controlled resource-rich nation, is looking to up its stake in foreign-owned mining interests to 35% from the current 20%. Publicly traded companies with operations in Burkina Faso include Fortuna Mining, Endeavour Mining, IM Gold, Orezone, and ASX-listed West African Resources. Though all of these companies have gone out of their way to assure investors that their assets in Burkina Faso are secure and in good standing, fear runs high. They've also experienced significant share price weakness over the past few sessions. After Q2 Metals dropped broad intervals of high-grade lithium values from its flagship Cisco lithium property in the James Bay region of Quebec, shares continue to rip higher, tacking on an additional 30% as of the close of trading on Tuesday, October 8th. There was potential for a 2-month gain of nearly 500% as of Tuesday's close. Available only online and in the US, 1-ounce platinum bars are now on sale for Costco members. They've sold silver coins and gold bars before that sold out like hotcakes. It'll be interesting to watch how platinum does at Costco. Next, the San Carlos Apache tribe has escalated its battle against the Resolution Copper project to the U.S. Supreme Court. This move follows an Arizona court ruling that favored the Rio Tinto-BHP venture. The tribe is protesting an earlier Arizona Supreme Court decision which permitted the Resolution Copper project to release contaminants into Queen Creek. Now, at stake is the Oak Flat campground, which is federal land that is sacred to the Apache, where the copper project is slated for development. Gold Fields will boost exploration efforts at its recently opened Salares Norte gold mine in northern Chile, using space technology. Now, the South African miner took 13 years to develop the project from exploration to production and is now specifically bringing in 3D subsurface imaging to the Breja Principal and Agua Amarga resource areas of Salares Norte. And that's all for today. Make sure to support the CEO.CA channel by becoming a subscriber. And go that extra mile by turning on your bell notifications. Thanks for being a part of Chairman's. We'll see you next week.